let's quickly go across to Edward Yardini, President Yardini Research as well, joining in this morning for his take on all things on global markets and, of course, how he sees the Indian market. Edward, great to have you on. Thank you so much for joining us this morning on India Market Open. Okay, let's start.
Thank you very much.
Thank you. So let's start with the anticipation of a rate cut at the December 10th meeting. What are you penciling in?
I think it's going to be 25 basis points. It's the market's expected to such a great extent that I don't think the Fed could just suddenly surprise us and not do it. However, when they cut on December 10th by 25 basis points, we may also find that there's more than one, two, or maybe even three dissenters saying that they're not in favor of cutting interest rates. As you mentioned, Friday morning in the United States, we're going to get the consumption deflator, which is like the CPI, a measure of consumer prices that the Fed follows very closely. That's not expected to really change anybody's mind at the Fed. So I think there's going to be a rate cut, but we just don't know the extent to which it turns out to be what I would describe as a hawkish rate cut, to the extent that the Fed sells it as maybe the last rate cut for a while. So not one in January, maybe not one for a while in the first half of next year.
Good morning from where we're at, and Alex here. So much of what the central bank does is adjusting expectations. And so I take what you're saying. I'm just wondering what you read from the consumption data that you saw earlier in the week, because if you look at the holiday season buying, then on the face of it, that number was higher. But when you look under the hood, people are buying essentials. So I'm just wondering where that inflation bug will come to bite, and whether it'll be sooner rather than later, in your opinion.
Well, you're making a very good point. I think let's look at tomorrow's data, which will include consumption not just of goods but also of services. And I think the service economy is still quite strong. So that's the way I'm looking at it. The consumer is very bifurcated. There's consumers that are higher income consumers that are clearly doing a lot of spending. Lower income consumers are focusing on essentials and they're not buying discretionary. But all in all, the consumer is still keeping the economy growing, notwithstanding some weakness in the labor market. I think that's partly because the consumers are sitting on a lot of net worth that just keeps going up with the stock market. So the stock market's had a positive wealth effect.
Dr. Yardini, you've been constructive precious metals for a while now. What we're seeing is an almost all commodities rise kind of a move, because base metals have had a phenomenal last few days as well. What's your sense of how much does this last, both precious metals as well as base metals?
Well, I think with regards to gold, which I've been doing more focusing on than some of the other precious metals, though the other precious metals have done very well. Platinum has been very strong. But with regards to gold, I think gold continues to consolidate its gains since the beginning of the year. It's gone up from about 3,000 to 4,000. I think it continues to move sideways, maybe through the first 3 months of the year, and then I think it'll resume its climb. And I see it getting to 5,000 by the end of 2026. And if it maintains its relationship to the stock market, I'm very bullish on the stock market. I think earnings are going to be very strong. I don't think we're going to have an economy-wide recession for the next few years. So I have the S&P 500 going to 10,000 by the end of 2029. If it does that, then I think we'll see the gold may very well get up to that price level as well. So bullish on stocks, bullish on gold.
Dr. Yardini, perspective on India, from the perspective of the slide of the rupee in the recent past. And I'm just wondering, from the outside in, does that make India less attractive, even more so than it has been in recent months from a foreign institution perspective? And what will be required for that to change?
Well, sentiment can change pretty quickly. And I think this year, the Indian stock market has been suffering from too much success in previous years. So it was one of the strongest emerging markets, one of the strongest global stock markets since before this year. And so I think It's been consolidating its gains. I think it may continue to do so into early next year. But with the Fed likely to cut rates some more, with the global economy doing really quite well, and with Prime Minister Modi diversifying India's relationships, economic relationships around the world, I think the Indian economy will do just fine, and Indian earnings will do as well. It's just the valuation multiple maybe needs some time for earnings to catch up.
Edward, one big development here today is, of course, the visit of Putin to India and all the talks that are taking place. Even as we wait for the unending wait, I would say, for an Indo-American trade deal continues. There's also going to be investments opening up from Russian investors into India, the announcement of a mutual fund, etc. How do you see some of these developments?
Well, it's actually pretty confusing, right? I mean, the United States, the Trump administration has been putting a lot of pressure on the Modi government to cooperate less with Russia, to buy less Russian oil, and to basically align India's interests more with American interests. And I think what Modi is clearly demonstrating quite publicly is that India has its own foreign policy, has its own interests, and some of those interests involve keeping a relatively good relationship with Russia, notwithstanding the American pressure. So I think it demonstrates a certain amount of, clearly it demonstrates a lot of independence on the part of India, and a confidence that India can do just fine no matter what the pressures are from the United States or any other country.
Yardini, as always, a pleasure speaking with you. Thanks so much for taking the time.
Thank you. Thank you.